Yeah.
All right, now we'll doing advanced audit assurance. Another question. Okay. As per the practice, let us look at the requirement first. Okay, and what it's saying in relation to the matters described in Exhibit 1 to 3. Comment on the quality of the planning and performance of the group audit and audit of the components of the group, discussing the quality management and the professional issues raised in respect of Cameron Company using Exhibit 1, 8 marks available, Dean Company using Exhibit 2, 5 marks available, and Horner Company using Exhibit 3, 7 marks available. Okay, professional marks will be awarded for the demonstration of the skill in analysis and evaluation, professional skepticism, and judgment and professional commercial acumen in your answer. 5 marks for the professional skills. So we will look at the requirement by requirement. It is 1st July 2005. You are an audit manager in the James and Company, a firm of chartered certified accountants. Your role includes performing post-issuance audit quality reviews, and you are currently reviewing the audit of the bond group, the group which had a financial year ended 31st January 2005, in respect of which an unmodified opinion was issued. Okay, unmodified audit opinion was issued last month. The group supplies computer components specializing in the graphic cards. You are reviewing the group audit file as well as the audit files for three of the group's subsidiaries. All of these subsidiaries are material to the group and have a financial year end of 30th first January. Each subsidiary audit opinion was also unmodified. Okay. You have been provided with the following exhibit which provide information about the bond group and the points you have identified for each subsidiary in the group. Cameron Company point you have identified for review of the information provided. Dean Company point you have identified during your audit quality review. Horner Company point you have identified during your audit quality review. This information should be used to answer the question requirement within the response option provided. Okay. So Exhibit 1, Cameron Company, 8 marks available for it. Your firm audits all group of companies with the exception of Cameron Company, a subsidiary which was acquired during the last financial year. Okay. Cameron was acquired by the group in 2004, April X4, and is audited by a Carry Associates, a small local firm. Okay. Cameron also outsources its internal audit function to Carry Associates. The section of external audit working papers provided by Cairo Associates and relevant to internal controls contains very little documentation other than a cross reference to the files maintained by the internal audit team. A statement we can rely on the internal controls as they were tested by our firm in May 2004. In respect of Carry Associates, the group audit working papers contain the following statement. Our firm can rely on the work of Carry Associate as one of James and Co.'s audit partners. Left the firm to become an audit partner at Carry Associates, and he was involved with the audit of Cameron Company. Other than some background about Carry Associate, which had been printed off from the firm's website to provide background information, there is nothing else on the file in relation to the firm. The group audit working papers also include a note relating to the consolidation of Cameron Company in the group financial statements. Cameron Company prepare its individual financial statement using local accounting rules, which is allowed under national regulation. It does not use IFRSs, which are applied by the rest of the group. The group audit partner commented in the working papers that local accounting rules are very similar to IFRS accounting standards, so they need to no need to perform any additional audit work in relation to consolidation of Cameron Company due to it using different accounting policies to the rest of the group. Well. Okay. So what we will do now, we will draft the answer first of Cameron Company and then we will move you know. Okay, so Cameron Company, a part Cameron Company. Okay, what we will say in it, there are problems indicated by the review. By the review in relation to both the audit of Cameron Company individual financial statement financial statements by Carey Associates and in the way group auditor has dealt with the issue of there being a new component auditor involved in the group. Involved in the group. Now, firstly, we will discuss the issue related to the internal audit. One mark for the introduction which I just gave. Okay, so now internal audit. It is not appropriate that Carey Associates has relied on the work performed by the internal audit team. A significant self-review threat to the objectivity. Threat to the objectivity of Carey Associates arises from the firm Providing with internal and providing with internal and external audit services to Cameron company. Okay, what we can say further that IESBA the code sorry suggests that suggests that providing an audit client with an internal audit service creates a significant self-review threat because in subsequent audit the audit team will use the will use the internal audit work performed leading to potential over reliance. So there is therefore a risk that the audit has not been performed with sufficient objectivity, activity, and professional skepticism. So far, so good. Further, we can say that It is not clear that sufficient, appropriate safeguards are in place to reduce the threat to an acceptable low level. For example, by ensuring separate teams are used for two separate services. Well. So far, it's going well. Uh, Further, we can say, okay. Further, what we can say, there is a risk that sufficient audit evidence has been obtained has been obtained over internal controls. This is a risk breach of ISA 315. Remember, you do not need to write the name or the number of the standard. You can say the answer that according to the relevant standard requirement. Okay. So this is a 315 ISA identifying assessing the risk of material misstatement breach, right, which requires auditor to obtain an understanding of the internal controls. Internal controls relevant to the audit. Including an evaluation of the design, evaluation of design, and implementation of the internal controls. So it is appears that This audit work has not been performed. Due to over reliance. So far, so good. Let's see how much we have right for the 8 marks till now. Okay. 1 mark, 2 marks, 3, 4 marks, and 5 marks. Right. We have to get 3 more marks. So there is a further issue with the timing of timing of when the internal controls had been tested, which took place in May 2004. In May 2004, the financial year ended on 2005. So, period roles had not been evaluated for the last 8 months. Eight months of the financial year. So either 330, it's that if the reliance on internal controls over time is right. So sorry for the interruption. There we go. Just a second. Just second. Right. Okay. Okay now. Right. So over a period of time, the test performer must be able to provide must be able to provide audit evidence that the control operated effectively effectively, okay, that the control operated effectively over that period. Over that period, this shows the over reliance on the controls as there could have been significant changes significant changes in internal controls during that period, which had not been identified by external audit team. Okay, and finally, to end the answer for this part of the question, we'll say that this raises concern over the quality of the audit, over the quality of audit which has been performed by Carry Associates. Carry Associates giving that concern Cameron company is a material component of the group. Of group, any material misstatement which have not been detected which have not been detected by the component auditor could have implications for the group financial statement. For the group financial statements, which could also be materially materially misstated. So to get 8 marks, this question drafting is enough, right? As you can see, right, for 8 marks, we have discussed issues uh, regarding the cabinet company, regarding the internal audit impact, their internal controls issues, their over reliance. That all is covered. And you can see I have used brief paragraphs and used every detail of the scenario so far to cover this part of the question. I hope you get it. Uh, in the next video, we will cover the other part of the question.